Welcome to the Assay TV. I'm Leo Stemp and I'm here today at the Learmonth in Cape Town at the One-to-One Mining Investment Conference, and I'm here with Mark Learmonth, who is the CFO of Caledonia Mining Corporation. Mark and his team are producing gold from the Blanket mine in Zimbabwe. Mark, welcome to Cape Town.
Yeah, morning. Lovely.
Delighted to see you here. And tell us a little bit about the Blanket mine. What are you producing there at the moment, and what are your plans for the year?
Yeah, we're producing about 55,000 ounces a year. We've done that for a couple of years now. And at that level, you know, we are very profitable, very cash generative business. But what we've been doing since early 2015 is we've been effectively building a new mine underneath the old mine. So the old mine's been running since 1907 or something, and it's getting a bit old and a bit tired now. And so we've been busy sinking a new shaft from surface down to about 1,200 meters or 4,000 feet. We finished the shaft sinking in July last year, and we're now busy equipping that shaft. So by the end of this year, by the end of 2020, we'll have finished that expansion project. Our production will start to increase. So next year we'll be looking at about 75,000 ounces. And then from 2022 onwards, we'll be doing about 80,000 ounces a year. And that's really important because, you know, not only are we obviously producing more gold and getting more revenue, our costs will come down. So at the moment we're sort of 860-ish all-in sustaining cost. We'll come down to, we say, between 700 and 800, probably in the lower end of that range. So we'll have a good margin. We don't need a high gold price to make that work. But critically, whereas now we're spending about $20 million a year on capex, going forwards, our run rate will be about $5 million a year. So the free cash that's going to come pouring out of this business is going to be very, very substantial, which is a great place to be.
How much does your new shaft actually cost?
The shaft itself probably cost about 50 million, but around it there's all sorts of other stuff we've done. So the total investment in the project's been about 75 to 80 million dollars.
And how was that funded? Was that
all internal cash flows?
All internal cash flows?
Yeah, because the prospect of raising equity, we didn't need to raise equity. You know, all small companies think that their share price is undervalued, but we were horrifically undervalued. And so for us to have issued equity would have just been too painful, and we didn't need it. So we managed the cash very carefully. And we managed the cash and we managed the spending profile so that the spending profile matched the cash generated, and it's worked. We're there now. We're there.
So you mentioned you're gonna have some free cash to spend on things after this 5-year period of capital expenditure. What sort of things are you going to be looking?
Well, there's three things we can do with the money. There's three legitimate things we can do with the money. The first, and we pay a dividend already. We've been paying a dividend since I think 2012. We've just increased it. So we now pay a quarterly dividend of 7.5 cents a share. So very, very early in January this year, we increased it from 6 7/8 cents per share per quarter to 7.5. So that was about a 9% increase. So we pay a quarterly dividend. So that's the first thing we do is pay dividends. If that doesn't work to move the share price, then we can consider buying some of our shares back. And then the third thing is we can look at investing in new opportunities in Zimbabwe. And so we can do, with the amount of cash that's going to come out of this project, it's not of doing any one of those three things. We can do all of those three things to a greater or lesser extent, which is a great place to be.
What is the current resource you have at the mine?
It's about 1.8 million, split pretty much 50-50 between M&I and inferred. The average grade is just over 4 grams a ton, and we've got a very good track record, I think 100% conversion ratio in terms of converting inferred to M&I. So this stuff's we don't fill up inferred resources with low-grade stuff that's never going to get mined. You know, it's high-grade stuff, and the only impediment to improving the resource definition is really more drilling. And to do more drilling, we just need the infrastructure at depth, and that's where this new shaft comes in. This new shaft will not only allow us to increase production at depth, but also allow us to do much more exploration at depth. So we're very comfortable that we can continue to improve the resource definition and find new material. This is completely open at depth. You know, we can't really drill much at the moment. Drill much below, I think, about 1.2 kilometers. The next door mine is already operating way below that, and so we're very comfortable that this mine continues to run at depth.
So how deep will your drilling platforms be?
Oh, well, we'll do the drilling. We'll put the drilling platforms in at the bottom of the new mine, so that will be at about 1150. And then we can drill down usefully about 300 meters down below that.
How much will that cost?
Oh, it's negligible. It's
And all funded through
a couple of
company
million,
cash.
couple of million, all funded through our own cash. Yeah.
So Zimbabwe, as a place for doing business, as a miner.
Yeah, look, the perception of doing business in Zimbabwe is that it's an extremely difficult place, and I've got to say that's not entirely fair. I think one of the things people fail to understand is Zimbabwe, unlike many other places in Africa, is actually quite a stable, quite a peaceful place. Actually, we don't have any significant security issues. We don't have difficulty transporting material around the place. We don't have difficulty with workers being attacked or the site being attacked, as happens in many other jurisdictions. So yeah, people misunderstand that. Where Zimbabwe did go badly wrong under the Mugabe years was the introduction of this indigenization policy, which forced local ownership, 51% local ownership of any significant business. And Caledonia and Blanket Mine was right at the forefront of that because of our listed status, and we're relatively small. So it was a great platform for Mugabe to push through indigenization. What this new government's done, one of the first things this new government did under President Mnangagwa, is to remove the local ownership requirement. And we've now demonstrated that not only has the law changed, we've actually demonstrated that in practical terms it really has changed, because we've just announced, again earlier on this month, we've just announced that we've bought a further 15% of Blanket Mine from an indigenous shareholder. So we've increased our stake from 49% to 64%, and that's a really important step forwards, because whilst we've always controlled the mine, now we demonstrably have, with a clear 64% ownership, and potentially perhaps increase that a bit further, we've clearly now got absolute equity control of this thing, which is a very important step forwards, which then helps in all sorts of things like financing and fundraising, and if you needed it, that sort of stuff. Where Zimbabwe also has got a bad press is the ability to access foreign exchange to make offshore payments, and we sell our gold to the government, which we're very comfortable doing. It means that we get the gold processed much more quickly and much more efficiently, and actually rather cheaper than if we were to export it ourselves. Then we get paid in a combination of US dollars, 55% in US dollars, 45% in local currency, and we actually use that local currency component to pay for our local expenses, our labour, our taxes, and other various local expenses. The balance, 55, is more than adequate to cover the cost of the materials that we import to run the mine, and then to repatriate profits. So Zimbabwe, money that we've taken from Zimbabwe quite legitimately, pays my salary, it pays for this event. It's doable. I think the critical thing is you have to, as a miner, you have to be in the position where your operation is successful enough to make enough money to actually export the money. I think the difficulty is that most of these Zimbabwean mines have been so undercapitalized for so many years that they're really just not making enough money, and so we're in a very different position. So we actually think that Zimbabwe is it's bureaucratically quite complex. You've got to jump through hoops. You've got to get bits of paper signed, and that can take some time. But we've demonstrated over the last sort of 10 years we've been working there that we can actually operate quite effectively, and that's one of the reasons why we pay this quarterly dividend, to remind shareholders that we're there every quarter. We're still there. We're still profitable. We're still making money. We're getting the money out of the country, and some of that money is going to you as a shareholder. So it's not as difficult as people might imagine. Going forwards, the critical thing about Zimbabwe is that it's very, very prospective, geologically from a gold perspective, and so we think there's some very, very attractive new opportunities in Zimbabwe, which no doubt we're going to talk about in a moment. So it's not as bad and it's not as scary as people might think it is.
But you've also done some work recently, I believe, on the power infrastructure around
the
mine.
Yeah. So Zimbabwe does have power problems. About half of Zimbabwe's power should come from a big hydro project on the Zambezi. Because of climatic conditions, that's a clever way of saying it ain't rained enough. The water levels in that project are now too low, and so that hydro project is now operating, I think, about 5% capacity. And Zimbabwe's other generation is coal-fired, and those coal-fired power stations are also somewhat old and aren't producing properly. So Zimbabwe has a massive power deficit. And if you were a residential or a residential customer, you were suffering enormous outages in Zimbabwe. the mining industry and the gold industry in particular was protected from that for quite a long time. But really, from about July until mid-August, the government just couldn't protect us anymore, and we were suffering quite extensive outages. At that point, we did have quite a large amount of standby diesel generating capacity, and we've now topped that up, so we can now run our entire operation using diesel. So that will run both the existing mining operations and the capital project, but that's not a long-term sustainable project. It's expensive. It's not particularly green, and there may from time to time be difficulties just getting your hands on sufficient diesel. So we've done two things. The first thing we've done is that we've signed an agreement which was brokered by the government. So the government was very creative in coming up with this, whereby we and some other gold producers, we pay in advance for power to be imported, but it's imported from South Africa. So that's kind of just kicked the problem down the road for a bit. It's fine for now, but again, given the electricity issues here in South Africa, that's also not a long-term solution. So we are very advanced now in evaluating a solar project, and we've got a bunch of people preparing tenders right now. We'll get those tenders in the next week or so, and the idea would be to do a two-phase project. The first phase, about 8 megawatts, costing about $8 million, which would provide all of Blanket's baseload electricity power requirement, clearly during the day. Then the second phase would provide enough for its peak requirement, but then we'd also need to enter into some arrangement to deal with the surplus power that's generated from time to time. But I've got to say, in terms of the permitting and all that sort of stuff for the solar project, again, the government's been very constructive and very proactive, because they want this as much as we want this. So yeah, we're kind of moving as quickly as we can to becoming a somewhat green gold producer.
Absolutely. And will some of that solar power be able to be shared with the local communities? And
yes, to some extent, yes. Although we're not. That's where we end up with the what we call the banking arrangement. What do we do with that surplus power? Where does that surplus power go? And that's something we need to negotiate. But I think actually, in terms of our CSR, we are actually at the moment evaluating putting a dedicated solar project into some social facility in Gwanda.
Your workforce, are they mostly local?
All local. So we employ about 1,640 people. Every single one of them is a Zimbabwean, and of those Zimbabweans, I think we've only got 2 who aren't black Zimbabweans. Then we have a small number of technical people based in Johannesburg who fly in and spend like a week at the mine, then come out again, and they provide sort of high-level technical services and monitoring, and they also assist with the procurement as well. So yeah, we employ all locals. We don't employ. The mine isn't run by expats at huge expense who fly in for 2 weeks, disappear for 2 weeks, upset the locals and cost us a fortune. That's not sustainable.
So it sounds like you've got very strong local support for the
Well, yeah,
project.
I mean, don't forget the community owns 10% of the mine,
Right.
which is really important, and we're always going to keep that. So I spoke earlier about perhaps buying back some of the other stakes in the mine. Absolutely want to keep the community in there. That's really important, and the workers have also got 10%, which is also very, very important.
Right. Earlier you touched on future sort of exploration potential, resource expansion potential.
Well,
You want to talk a little bit about that?
yeah, we must have evaluated 24 projects in Zimbabwe. I mean, the geological prospectivity is outstanding. I mean, some of this stuff really blows you away. The difficulty in terms of closing a deal and actually bringing something to the table is two different. First is that the existing owners of those assets, even if there's no resource base, in his mind, he might think he's got a 5 million ounce resource base, and in his mind he wants to get paid for a resource base that doesn't yet exist. So clearly that's a problem. But if you can get through that, then there are often quite some difficulties with proof of ownership. So over the last 30 or 40 years, these assets have been dealt away in meetings, in coffee shops and restaurants and bars and stuff, and I've done a deal with you and you think you've done a deal with me, and we may not have papered it properly, and then even if we have papered it properly, you know, the paperwork may have got lost by the government, and then even if all that's happened, you know, it's a joint venture and you've not fulfilled your obligations or I've not fulfilled. So all this thing's very, very messy, and frankly it needs government really now to get a grip on this and to clean up the ownership of assets. Otherwise, the risk is going to be that good, high-quality assets they're going to be sterilised, and Zimbabwe cannot afford that. So that's something that the government really has to move
Are
on
they
quite
working
quickly.
on that?
Yeah, yeah.
But also, your team, you have a lot of experience in Zimbabwe.
Mm.
I mean, it might be a good time to talk about that, actually. Is the management team, the board?
Yeah,
Who's
so
involved?
as we've said, the management at the mine are all Zimbabweans. The mine manager's been there for decades and decades, and he is thoroughly plugged into what's happening at the local level. We've got the chief executive, Steve Curtis, was actually brought up in Zimbabwe, and he's got excellent relationships at the right at the top levels of the Zimbabwe government. And very nice, it's a very open, very honest, very transparent relationship, as where we make it very clear to them what we want to do, and we make it very clear to them that we're not going to ask for favours. We don't want favours. We don't want to compromise anybody. But if there's things that government should do which it isn't doing, so things like how quickly do you get your VAT returns back, your VAT recoveries back, all this issue about leases, we make it very clear that government's got to step up to its side of the obligation to create a stable environment where people like us can invest shareholders' money. We can't put shareholders' money into projects if we don't know at the end of the day that we've got legal title. That's just not going to work. So that works very nicely. That works very well indeed.
So who are your shareholders?
Our biggest shareholder is Alan Gray, based here in Cape Town. Alan Gray is clearly well known in South Africa. It's not quite so well known internationally, but Alan Gray in the South African context is one of the big six South African investment houses. They're very aggressive in Zimbabwe, know a lot about mining, and they've been on the register since I think about 2013. Very supportive. We've then got 2 or 3 smaller UK institutions hovering just below the 3%. Other than that, it is largely retail in the USA and Canada, and to a small extent in the UK.
And where are you listed?
We're listed at the moment. Our main listing now is the NYSE American. We upgraded that listing a couple of years ago, and it's worked very well for us. The American market is much better in terms of liquidity and just general risk tolerance. They seem to, if they like something, they do it. They don't sort of hover on the sidelines, sort of warming up and clearing their throat and thinking about doing it. So the American market's quite direct. Then we've got Canada and also London as well, AIM as well.
So three. Code?
It's CMCL or CAL, depending on which market you're in. Liquidity has been historically a problem, but certainly the news flow in the last few weeks seems to have boosted liquidity. So increasing the dividend, buying back the 15% in blanket. We had to put out a reverse profit warning last week, sort of saying that whereas guidance for last year was $1 a share of earnings, actually it's going to be closer to $1.80. So all those together seems to have lit a fire under the share price and lit a fire under liquidity, which is good. And long may that continue, eh?
Yeah, absolutely. It sounds like you've got a lot on your plate at the moment with expanding your production.
It's a very exciting place to be right now. Very, very exciting. After 5 hard years, we can see this thing coming to fruition. In the background of a higher gold price and a government that is anxious for us to make new investments. It's all coming. All these stars are coming into alignment, and it's a very, very exciting phase for us right now.
Well, thank you very much for joining us today, and best of luck for the years ahead.
Thank you, Leah. Thank you.